Welcome to A Better Lifestyle. Today I have the pleasure to have Adam Gower. Adam is the founder of Gower Crowd. He has experience in real estate in regards to raising capital. So we'll be talking about that, but specifically in the online space, real estate crowdfunding. So welcome, Adam, to the podcast.
Well, thanks for having me, Richard. It's nice to be here.
It's my pleasure. So, Brick tell us, what is real estate crowdfunding?
Okay, so basically it involves raising capital online. It's as simple as that. The ability to advertise in order to raise equity capital from individual investors that you may never have met before. That's it in a nutshell.
Okay. Is it similar to syndications?
It is syndications. It's exactly the same as syndication. So a syndication is where you have a group of investors who participate in a specific deal, right? Everybody invests a little individually, right? So there's not one single investor, and the sponsor will syndicate it. He'll send it out to, or he will raise capital from a broader network, from his own network, and each individual will invest a small proportion, relatively small proportion, of the total amount of equity needed. Crowdfunding is the same thing. It's just by another name. And the big difference in the US was that it was prohibited to advertise to raise capital for real estate investments until 2012. And then the laws changed. And when the laws changed, it meant that you could advertise, basically. You could go online and you could say, invest in my deal. So that's really the only difference. Syndication in this sense is synonymous with the word crowdfunding.
Okay. Are there specific platforms for the real estate crowdfunding, or it's just independent?
Okay, both exist. So when it first started, when the laws changed in 2012, there were several platforms that emerged as marketplaces. So what they would do is they would advertise for investors, and they would educate those investors about how to invest in real estate. Well, what are the pros and cons of investing in real estate? In parallel, those platforms went out to sponsors who wanted to raise capital, and they said, you can list on our platform. You can list your deal on our platform. And so they created marketplaces. An investor would go to that platform and would see multiple investment opportunities from multiple sponsors. But at the same time, this is the business that I'm in, at the same time, individual sponsors thought, well, I don't want to advertise on a marketplace. I want investors to come to me directly. And so what they do is they set up platforms that function in the exact same way as the marketplaces. In other words, they create education. And this is what we do for our clients. They create educational sections on their website that are highly educational, lots of lead generation forms on the website, optimized for SEO and today GEO, basically to attract organic leads. And then they do marketing to drive investors to their website in exactly the same way as the marketplaces do, but they do it just for their own deals.
Okay. And what about the compliance side?
Compliance is the same on both sides. There are some slight differences with the marketplace, but in the States, and I'm not sure what the Canadian regulations look like, but in the United States, you can solicit investors. The restrictions are mostly about being honest, not exaggerating, providing full disclosure on your background, not hiding material information. But that's the same with any kind of marketing. It doesn't, whatever kind of marketing you do, you've got to be compliant with best practices for what you actually say. But in terms of SEC compliance, what the 2012 Jobs Act did was it allowed for you to advertise. So the one major compliance change, which isn't really that major actually, is that prior to 2012, you just needed to ask your investor if they were an accredited investor. So you have to have a certain level of net worth or income in order to qualify, in order to invest in a deal. So prior to 2012, you just need to say, yes, I qualify if you were an investor. After 2012, the sponsor would have to take reasonable steps to verify that you were accredited. But it's an administrative step and immaterial, really, to the whole process of raising capital online.
So let's say you're raising $1 million. What's the mechanic like? How does it work? Like they say they need 10 investors for 100K, or how does it work?
Well, it really depends on what you want to do, what kind of minimum investment you want to set. Typically, our clients raise considerably more than $1 million, but you would set a minimum. So anything from really at the low end, 25,000, average probably 50,000, and really the max to be effective is $100,000 minimum. But really what you want to be doing is to make it easy for first-time investors to get to know you. So you want to keep the minimum investment low so that it's easy for them to make the decision. And then over time, what happens is they get used to your performance, to what you do, to your reporting. They get to like you. They understand that you are delivering to the, not promises, but to the projections that you made. And in time, they will invest more. So you want to try and keep that initial minimum investment as low as possible.
I see on your website you were talking about the equity investing and, equity investment and debt investment. Can you clarify that?
Well, the two sides are typically you would get debt from a bank, right? So a bank will give you the debt that you need. And the equity is the money that the bank won't lend you. So if you're buying a $20 million building, for example, the bank might only lend you 13 million, just to pull a number out of my ear, which will leave you with you will need to then come up with an additional 7 million. So typically what a sponsor will do is they will invest some of their money into that 7 million, and then they will syndicate the rest of the money that they need from other investors. But having their own money in the deal signals confidence in the deal. It's called an alignment of interest. And investors know that if the sponsors invested their own money, they stand not only to gain if the deal does well, but they also stand to lose if the deal doesn't go well. So that's the alignment of interest. Both sides of the equation are pointing in the same direction.
So going back to my previous example, let's say 10 people invest 100K. Some people might say like the more people in the deal, it's going to dilute the profits for the investors. So how do you address that?
Yeah, it doesn't dilute it at all. So it's you get a pro rata share of the investment. So if the total investment is $1 million, you invest 100,000, you will get 10% of whatever the profit is that was assigned to limited partners. If you invest 50,000, then you will get 5%. If you invest $500,000, you'll get 50%. There's no dilution. It's equally split, and it's split pro rata, equal and proportional to the amount that you invest.
Okay. And what's the timeline? Because usually in syndication, sometimes they hold for 5 years and then they refi or they sell. So how do they work those things?
So it really depends on the sponsor and on the deal. Some sponsors, we work with sponsors who have 10+ year life cycles for their deals. Others project that they will sell within 3 to 5 years. It really depends, Richard, on what the business plan is for the investment itself. It's entirely up to the sponsor, and it's up to the sponsor to explain what their logic is in terms of the amount of time that they plan to hold a project to the investors. So it's up to the sponsor. It can vary as much as as much as any deal can vary across a range of variables: size, location, asset class, and life cycle.
Okay. One thing that you may be aware of is it's not just anybody that could go online and raise capital, like, give me your money. So how do you build that, your credibility, and how does someone overcome that?
Well, you've got to have a track record, typically. So without a track record, it's very difficult. So if you're just starting, you probably want to start with people who already know you and who trust you. So typically, sponsors who are starting out will raise money from friends and family. They'll invest their own money, and then they'll raise money from friends and family. Once they have started to go full cycle on deals, in other words, they buy, renovate, improve, and sell, right? And they make a profit. Then they've started to build a track record. And with that track record, you would then you would have a credible story to explain to new investors who don't know you. Hey, look, this is what I did. This is how I was successful. These were the mistakes I made. This is how I overcame the mistakes. Would you like to invest in my next deal? Typically, the clients that we work with, though, are seasoned multi-cycle sponsors. So they have been in the business for decades. And so you can look back at their track record, and in some cases, they go back 20, 30+ years, and they may have gone full cycle on dozens and dozens of projects. So they have a significant track record that you can point to. But if you're starting out, you want to start out small and modest, work with friends and family, go full cycle, and then build up slowly. Your friends and family might introduce you to people as well.
Okay, so how do you work with your clients? And talk to us about your company, Gower Crowd.
Sorry, what was the last part of your question?
I said, talk to us about the Gower Crowd.
Talk to us.
Yeah.
Yeah, so the most important thing when you are raising capital online, actually, when you're raising capital at all, is that your prospects know who you are, right? There are 3 core pillars to any kind of marketing, but particularly to capital formation. Your prospects need to come to know, like, and trust you, right? Those are the three pillars. And so the first step is to become visible online. You've got to have a good online presence. You have to be on LinkedIn, YouTube, you get active on podcasts. And most importantly, your website needs to be educational. It needs to explain exactly who you are, what your background is, what your investment philosophy is, your investment thesis, your track record, the way that you see the real estate world. All of that needs to be on your website. When you have that on your website, what happens is when you start to do marketing is that your prospects come to your website and they can get to know you without you having to talk to them directly. They read the articles on your website. They watch videos of you talking about your philosophy on your website. They might check you out on LinkedIn, right? They do a search, and the first 2 things that are going to show up will be your LinkedIn profile and your website, if you're doing it right. So you want to have information on both of those platforms that educate prospects to understand, to coming to know, like, and trusting you. So what we do is we build those systems, best of class digital marketing systems, websites that have lead generation forms, that contain videos of you talking about your investment thesis and background and philosophy and track record, etc., and articles on the website, so that when somebody, and we build the website, we create lead forms, lead gen forms. If you're interested in joining the wait list for or sign up to join the wait list for our next opportunity, that's a lead gen form, lead generation form. Somebody signs up, they get an automated email. We build all of this that says, thanks for your interest. Here's, a white paper that we wrote about the market in such and such a town and explains why we like it so much. And then what we also do is we produce ongoing nurture communication. So that's things like a newsletter, like a monthly newsletter or quarterly newsletter that you send out to people so you can maintain and continue to build the relationship over time.
What are the mistakes you see people make?
Websites without any kind of educational content, websites without lead generation forms, poor LinkedIn profiles, going straight to invest with me before establishing a relationship. So we'll see websites that say, invest now. Right? I have a button that says invest now. If somebody lands on your website, that's like meeting somebody for the first time and saying, it's nice to meet you. Here are my offering documents and wiring instructions. Here's where you sign, and this is where you wire the money. Right? You would never do that in an initial conversation. In an initial conversation in person with somebody, you would have an open discussion. They would ask you questions. You would tell them about you, just like you're doing with me now. You tell them about yourself. You get to know them a little. And over time, you would see their content and you would establish a relationship with them remotely from them without actually having to have direct contact. So the mistake that people make is they don't bother with the know, like, and trust sequence. They just go straight to, I've got a new deal, invest with me. And that makes it very difficult. It's not impossible to do that, but it makes it very difficult to do it, especially for first-time investors, for first-time sponsors.
What would you say are the downsides in regards to raising capital online?
Downside. It takes work. I mean, basically what you're doing is scaling your business. So if you've got, we have, for example, companies that have institutional investors, for example, institutional investors, and they want to get out of the institutional world. We have clients who are family offices. They might be third generation family offices where the investor base is very solid, but is aging out, right? There's their grandfathers and fathers' leads or connections, and the next generation is wanting to build their own network of investors. So those are typical characteristics, or couple of typical characteristics. And the challenge is, the downside is getting the machine up and running takes a lot of effort. That's what we do. We build that for you, right? We do the whole thing for you. So that minimizes the effort. But the nice side of that is that once you build it, you only ever have to do it once. It becomes an asset to your company, and you can use the machine that we build for you indefinitely. It works indefinitely. It's there permanently. It's like having a supercharged website instead of a website that just acts like a contact us website. So the downside is the initial effort, but that you can do within 90 days. So it's not such a big deal.
Is there a time where you had a client and things didn't work out properly in regards to a project?
The biggest challenge is once you've established a relationship with, or once you've built a lead generating machine online to attract prospects, they only want to hear from, they are anxious, predisposed to investing with you. So you need to find good deals. You would only go into this process if you know you have a good pipeline of assets that you can buy and invest in. So the biggest downside, or not the downside, but the biggest challenge is now feeding that network of investors with good opportunities. And that's, some of our clients haven't done deals for 3 years, 3 years, because the market has been very tough. So investors, they look elsewhere. They want to invest their money, so they look elsewhere. So you want to stay in touch in between deals. It's very important. I think that's probably the biggest mistake that sponsors make, is not maintaining contact on a regular basis with their investors or with their prospects in between deals.
So how does someone get started if they want to go into that direction?
Okay, so like I said, the best way to get started is to find a good deal and raise money from friends and family. You need to have a securities attorney that can put the documents together for you to make it, legal. And you've got a contract to offer a set of offering docs, and then find a good deal or start talking to friends and relatives, friends and relations about, this is the business I'm getting into. This is what I'm looking to do. This is the kind of investment I'm looking for. This is why I like it. Again, you can put all of this on your website, and get a first deal off the ground. Get a deal off the ground and hustle for it. That's the way to start. I mean, you've got to start somewhere, and the first place you start is a new deal with existing relationships.
Do you only work with real estate developers or people who invest in multifamily?
Right. So I deal with both, every single asset class. So ground up developers, right? Multifamily, self-storage, data centers, medical office buildings, just about every asset class, mobile home park, every asset class. We've dealt with every single asset class, just about every asset class.
What about the deal size? Is there a deal size that is required, like minimum to raise capital, or it's only for big deals?
Well, the deal size, the minimum deal size to raise capital is whatever deal size you need to raise capital for. So if you've got enough money to invest $1 million yourself, you don't need to raise capital. So it really depends on the size of the deal that you're doing. So in the world that I live in, typically our clients are not buying anything really on the extreme low end. I would say probably 15 million US, and then on the high end, we'll help them raise in equity 20 to 30 million. So they're going up to sub-institutional 50 to $100 million deal sizes.
So what happens if someone is from Canada and they want to set up a structure like that, a crowdfunding? How does it work if they're getting investors from the US?
Well, you need a lawyer. The first thing you need is you've got to hire a securities attorney, somebody who can advise you on the regulations, what you need for both Canadian investors, but also what you need for cross-border investors. So that's your first step, is to hire an attorney who can advise you on what the legal requirements are.
Okay. And what about the investor, someone who wants to invest in a project? What would you say to people like that?
Make sure that you know who you're investing with, and that you understand what their background is, what their capabilities are, what their track record is, and make sure that they are good communicators. You don't want them to go quiet as soon as you wire your money and they suddenly go silent. So just get to know the sponsor, understand the sponsor well, and understand the asset class that you're investing in as well. You've got to do research and learn what it is that you're investing in, because these are private offerings, right? So you need to, and you're investing substantial amounts of money. So the first thing you need to do is to educate yourself on what investing in real estate is about, and before you make an investment, make sure you know everything that you need to know about the sponsor you're investing with.
There's one thing that I saw on your website. You were talking about direct investing and indirect investing. What is that?
Um, I'm not really sure what you're referring to, Richard. Sorry.
Okay, it was on the website, so maybe I made a mistake.
Well, just out of context, I'm not really understanding your question.
Okay, no, because it said like direct investment and indirect investment. So,
I don't know what
okay,
context that is. I
okay.
can't answer that. Sorry.
I just saw it on the site,
Yep,
so that's what I was
understood.
just. So, any last words in regards to raising capital online?
That you've got to have patience and a long-term perspective. Make sure that the best way to make money in real estate is to make it slowly. So don't be in a rush. Take it slowly. Build your network, build your portfolio, build your experience, and do it over time and have a long-term perspective. And make sure you don't take on too much debt. Debt is the killer. If you've got too much debt and the market turns, you'll lose everything. So keep debt low. Think long term and keep debt low.
Where can people learn more about you and follow you?
Okay, so the best place is go to my website, which is gowercrowd.com, Gower crowd, gowercrowd.com. And I have a free newsletter. Goes out once a week. Sign up for that and you'll be in touch. You'll get an email from me.